Hello and welcome back to the third and final part of this zone recovery series, where I said that I would show some variations on the standard approach. So before I get further into this, let me remind you of something I mentioned in the very first of this series. Zone recovery is sometimes, in fact often, referred to as a no-loss technique. You'll find most people will tell you that this is a way of guaranteeing no loss. But as you should have realized by now if you've been watching my series, I'm not most people and I'm not telling you that this is no loss. If you haven't seen the first part of this series, then I recommend watching it. It will make more sense in this part, and there's a full description of how the zone recovery technique operates. There is a link in the description below the video to the first part of the series and to the complete series. Now, while this is sometimes referred to as a no-loss technique, it is actually a martingale technique. And that means that you can only achieve no losses by having increasingly large position sizes to make up for the losses, unrealized losses admittedly, but the losses that you've already incurred. And because of that, it carries a very high risk. So as long as you don't exceed your maximum on the account and get a margin call, then you can achieve no loss. But if you're trading a smaller account, it's very easy to reach a point where you simply can't make the next trade. You'll get a margin call and your losses will be substantial. So this is not suitable for small accounts, and I do not recommend using this technique. So today I'm going to be taking this standard technique, which would begin with buying a single lot, selling 1.4 lots, buying 0.96 lots as we cross this zone, and getting to these increasingly larger lot sizes. I'm going to take that and I'm going to show some alternatives that make your trading a little easier, that make your positions easier to manage. But in the end, nothing can avoid that you're going to have increasingly large losses until eventually you make a profit. And that if those losses become greater than your account can stand, you will simply incur those losses and there's no way out. Now, the first alternative I'm going to show you is very important because the remaining will build on top of that. I'm going to be using my standard examples here where I've said that my zone size is 40. I'm not saying what that is, but you could call it 40 pips. And that I'm aiming for an initial profit of 100 pips. And if I don't achieve that and cross the zone, I'm still going to exit at 100 pips below the zone. So if my initial trade reaches its profit target, and the example here is a buy, if that buy reached the profit target, then I would make a 100 pip profit. If it doesn't and I cross the zone, then after that I'll be taking these trades simply to avoid making a loss, and whether I close at the top or bottom exit points, I will be achieving approximately a zero loss, zero profit. There may be a few pips involved in there because of some rounding, but it will be close to a zero profit or loss if the first leg doesn't actually achieve its profit. So taking the standard approach, I would buy one lot and then sell 1.4 lots. The sizing of that 1.4 lots is such that if the price then continues down and reaches the lower exit point, I will achieve a profit on that sell and a loss on the buy, and those two will net off to approximately zero. So you see that after I take that sell, I have a net result of 0.4 lots negative, or 0.4 lots in the sell side, and my profit in the end is 1.4 lots by the 100 pips profit that I've made on the sell, minus one lot of buy by the 140 pips of loss that I've made on the buy. So profit of zero. This is called a no loss approach by many people because you don't close any trades until you reach that final exit point, and therefore you've never closed a trade in loss, or you've never closed an entire position in loss, because each losing trade will obviously show up as a losing trade. But you do incur an unrealized loss. At the moment that price crosses the bottom of the zone or even crosses the top of the zone on the way down, your buy trade will be in negative and you will have an unrealized loss. While that doesn't affect the balance of your account, it does affect the equity in your account, and equity is the important number. When you're trying to make new trades, then your broker will assess a margin requirement and deduct that from your equity, not from balance, to determine whether you have sufficient margin available to take a new trade. So equity is truly what you should be looking at. And while this approach maintains the balance of your account, because it's only when you close the entire position that the balance changes, it will still change your equity constantly as the price moves up and down. So the first change I'm going to make is to apply net positioning. Now, this is not a netting account as you would see in MT5 with some brokers. That is still an entirely different concept and is probably not even worth considering in zone recovery. What I'm talking about is a position where I don't hold the losing trades open and I open smaller opposite trades. So let me demonstrate that. In a netting approach, I would still be buying one lot initially, and this is just my example. I'm assuming we're starting with a buy, could easily be a sell. I buy one lot, that one lot crosses the zone, and instead of opening 1.4 lots of sell, I only open 0.4 lots. At the same time, I close the buy, so I still have a net result of selling 0.4 lots. My net position is still the same. And if the price continues to fall and hits the lower exit point, I still have a profit of 0, which is the 0.4 multiplied by 100. So that's my sell, 0.4 lots by 100 pips, minus the one lot of buy by the 40 pips of loss that I incurred on that buy. So I've opened a much smaller sell position and I've still achieved my 0 profit, 0 loss. If we take it a step further and look at a third leg on this, so I would buy one lot. When it crosses the bottom of the zone under the standard approach, I would be selling 1.4 lots, and then if the price crossed the top of the zone, I would be buying 0.96 lots. So that gives me a net result of 0.56 lots buy, and again, profit would be 0 because I've got a loss on the 1.4 lots of sell, but I've got a profit on my total 1.96 lots of buy, and the profit comes out to be 0. If we change that to a netting approach, then again, I'm selling 0.4 lots now when I cross the bottom of the zone, but when I cross the top of the zone, I'm only buying 0.56 lots. And that's because as I cross the bottom of the zone, I close the buy, and then when I cross the top of the zone, I close that sell. So I've incurred those losses each time. I've realized them. The losses that I'm incurring as realized losses are the same as the unrealized losses in total, but it does mean that my trades that are open are much smaller. So I still have a net result of buying 0.56 lots. I still have a profit of 0, but I've opened smaller lot sizes. This is perhaps a better approach for two reasons. Firstly, I only have to manage a single trade in the position, so I don't have a growing number of trades to worry about. And less trades to worry about is less things to go wrong. But secondly, each time I open a trade, I'm going to incur commissions and spread and possibly swap. And that's going to be based on the total size of those lots. So by taking this approach, I've opened one lot on the buy, and then I've opened 0.4 on the sell and 0.56 on the buy. So the total number of lots that I've opened is 1.96. And my commission and spread will be calculated on that 1.96 lots. We just step back to see what we would have had using the non-netting approach. So with this approach, I would have had a buy of 1, sell 1.4, and a buy of 0.96, which would be a total of 3.36 lots. So a much larger total number of lots, which means a larger commission and larger spread costs to you. So the netting approach can save you a little bit financially. So we'll go across and look at the code and see how we can modify the initial class so that we can implement this netting approach. Now, the initial class was described in the earlier video, and there is a link in the description to the part 2 of the series where you can see that video. I won't be going over the class again, so if you want to see how that originally worked, then I recommend you watch part 2 of this series. I've already written the first class. I know I've called it zone position underscore net, so this will implement the netting approach on the zone position. First change here, I've included the base classes, and I'm still including the zone position.mqh. That will bring in the MQL4 or MQL5 version as appropriate. Here my class definition, I've changed the name of the class to zone position underscore net, and that's inheriting from czone position. In order to calculate the netting, I'm going to need to store a value that shows me how much of that accumulated loss I've built up so far. So I'm saving a variable here called mvol profit. Now these particular functions are modified from the base class, so the add new trade, lots, and close trades, and we'll see those when we get down to the descriptions below. And of course, because there is no default constructor, I have to implement a constructor in each of these classes. So I've just implemented the C-zone position net constructor here. Takes the same arguments, target size, zone size, and the supplement, and then just calls the parent class, passing in target size, zone size, and supplement. And the destructor again, but it has no implementation. And this is also going to be a modified function, open position. So the first function I've implemented that's modified is the open position, and the only change here is this mvol profit variable, and I'm just setting that to 0. So when the position opens, I have no accumulated losses on this position. I'm just setting that to 0, and then I'm simply calling the open position method on the parent class. Note this double colon syntax allows me to call a method in the parent class. If I simply called open position again, it would come back to this open position method. So by including the name of a class with the double colon, I can force this to go back to that parent class. Now the add new trade method, and this is where most of the changes are happening, because when I added a new trade in the base class, I simply created a new trade of a size big enough to make sure I had a net position. With the netting approach, I actually want to close all of the existing trades. So the first thing I'm going to do is create this S-zone result type, which we've seen earlier, and I'm initializing that. And remember that the first part of that, or the first value inside the result, is the success, so I'm initializing that to true. And then I'm calling close trades, passing this result in. So that will attempt to close all of the existing trades for the position, and it will set the success value here to true or false, depending whether I've been successfully closing all of those. And it will also calculate the loss that I've made on those trades so far and return those inside this result value. Now, I want to make sure that I can close everything. It's possible that one trade won't close for various reasons. So I've implemented this loop here where I'm going to retry. I'm only retrying 10 times. Now this is not a foolproof method. If something's gone wrong, like the market has closed, then retrying 10 times is not going to help. So you might want to look at a more robust method. But in most cases, this is going to work first time through anyway. But just to show that you may want to implement a retry, I've put this loop in here that will retry up to 10 times or until I have a success from the result. And all I'm doing in that case, I'm putting in a sleep 1000, which waits 1 second, calling refresh rates to get new values for the current market prices, because in that 1 second those prices can move. And then I'm resetting the success to true and calling close trades again, which will return this success as whatever it would be from the closed trades. So for now, I'm just going to attempt 10 times and assume this has worked. If you are not confident in that, you may simply want to exit at this point. But I'm going to assume that was successful. And then I'm capturing in this mvol profit variable, I'm capturing the volume profit from all of these calls in the result. Now, because I'm only initializing that vol profit here the first time through, no matter how many times I go through this retry loop, it will still keep accumulating into the vol profit of result. So now I have a total vol profit that represents all of the losses. I know I've called it vol profit, but they will actually be losses. This will represent the total loss on all of the positions or all of the trades I've made so far in this position. This is an unlikely situation, because if the zone is working correctly, I should be losing every time I cross the zone. But if there's been some kind of major market move and huge slippage, it's possible that I've actually made a profit. So I'm just checking here. If the profit is greater than 0 and we've had a successful close on everything, then I'm just going to close the position and be happy that I've made some profit. But in most cases, this will never happen. The vol profit will always be a loss, because the nature of zone recovery is that once you cross that zone, you're in a loss position. But once I've done that, and the whole purpose here is to close any existing trades within the position and calculate the accumulated loss, then I can again call C-zone position, add new trade, and rely on the parent class to take care of creating a new trade. And then the last function to create for netting is lots, because I'm no longer creating a lot size that's equal to the total opposite lots plus what I need to create a net position. This is just the net position. And it's actually a simpler calculation. My vol profit, remember this is a loss, so the first thing I'm doing is minus vol profit divided by target plus this supplement amount. So I'm saying that my total loss, I want to recover that over this number of pips, or this price movement. So vol profit divided by that total price movement tells me how many lots I need. And then this is the lot rounding statement that I had earlier, just to make sure that my number of lots rounds up to the step level for that particular symbol. And then return lots. So that's actually quite important, because where previously the second leg in the example would have been 1.4 or 1.41 with a bit of a supplement, now it's only going to be 0.4. That's everything needed for zone position netting. This works for MQL4 and MQL5 because I've already extracted the different methods required for those two in the zone position base class. So I'll just check, I'll do a compile on this Nett class to make sure that that works. And that was successful. And now I can open up the Expert Advisor as an example for this. Okay, I've already written the MA Cross ZR Net. Now this is based on the earlier example from the previous video, the MA Cross ZR. It's a simple moving average cross EA, but I've included the zone recovery classes in here to recover from positions that don't make a profit. And this is simply that earlier EA with some modifications, and I've actually included the lines that I've taken out as comments, so it's easy to see what I've changed. So the first change, I'm using a different include because now I have the zone position net class that I want to include. So I've removed this line that said include zone recovery zone position, and I've replaced it with this line include zone recovery zone position net. This next change, I've added this hash define ZP class as C zone position underscore net. That's not essential, but because I'm going to be reusing this file again and again, this makes it much easier to change the class name. So I'm just doing a single point definition of the class name that I'm using here, and I'll be using that ZP class then further down in the expert. The next change here, second, is where I'm actually using this ZP class, and I'm just defining a variable, which is the zone position variable. And then the third change, when I'm creating the new zone position, I'm calling this new ZP class here, but the arguments are the same for all of these implementations. So it's simply calling target size, zone size, and the supplement if you want to just squeeze a little bit more out to cope with commissions and spreads. Nothing else changes in here from the original EA. So I will just compile that to make sure that works. Right, and then we'll run a demonstration on this. I have the MA Cross ZR Net EA loaded here in the strategy tester. I've set my time period from 2020 1st of January to 31st of December, so I'm covering the entire year for 2020. I'm running a period of 4 hours, and I've set the spread to 10 points, which should be a normal spread for Euro US dollar. On the screen I have the fast moving average as the blue line and the slower moving average as the white line, so we can see when they cross while I'm running this. And here's the first point where the fast line has crossed below the slow line, so we've opened a sell trade. Now the price went up and down a few times, but that sell trade actually closed in a profit, closed down here. So I'm just going to run this forward now and find a place where the zone actually comes into play. So what we can see there is the buy trade opened here, and then the price has fallen back by 40 pips to close out the buy trade and open the opposite sell trade. And you can see that the size of that sell trade is only 0.41, where previously it would have been 1.41. Now I've let that run, and the sell trade has closed then at 100 pips in profit, which gives me a net result of close to zero. If I look at the graph, I can see the initial profitable sell trade here, but then here's the loss that we made on the buy trade that crossed the zone, and then the sell trade, when that closed out, has closed at approximately zero from the original entry point for that position. I'll just stop this, take it out of visual mode and restart it so that you can see the result for the entire year on the graph. So here's the result with the netting approach. And you can see that because we are actually closing out losing positions, there are some points where we suffer some heavy losses, but then those recover with the one trade that comes in at profit. Although that one trade, you can see here, this is 3.54 lots traded in order to bring that out of loss. And in this case, 4.32 lots. So the size is growing. Remember, I warned you at the beginning of this series that zone recovery is a martingale strategy. I don't recommend it because the lot sizes can grow. We've been lucky here that they haven't grown too much, but the next steps after 4.32 will go up very quickly and probably be larger than most people's accounts can deal with. But that's the result for the year using the netting approach. I'll just do the same thing on the non-netting approach so that you can see the difference in the graph. This is the graph for the non-netting approach. And although it's been closing the profitable trades before the losing trades, just because it looks better in the chart, you can see that we've got some significant total losses here. They're unrealized losses, and that's why zone recovery is often promoted as a no loss situation, because at the end of each position, we're still approximately zero and we never really go very far into negative territory. But these trade sizes, 7.81 lots here, is the biggest trade size that we made with the non-netting approach, where 4.32 was the biggest size for the netting approach. The next variation I want to introduce is restart and recovery. And in part 2, I mentioned that I hadn't handled restart and recovery, which is an important part of writing an EA because you never quite know when you might be forced to restart your expert advisor or MetaTrader platform. So I'll be implementing restart and recovery, and I'll be doing this on top of the netting that we've already built because it's much easier to deal with that. I will also then show how we can handle multiple trades. So to date, I've only been having one position open, and if that position is open, I'm not opening any further trades. So with the restart and recovery, I'll introduce opening multiple positions at one time. Now this is the restartable class. I've based this on the netting class because it's much easier if I'm only dealing with a single trade at a time. And I would recommend that if you're going to try to do restartable, you also implement netting. The changes to this are still, though, rather significant. So let's begin. First thing, I'm including the zone position underscore net because this is where I'm going to be inheriting from. So class name, zone position, C zone position underscore restartable, public inheritance from C zone position underscore net. These two methods, add new trade and close position, are modified for restartable because I need to be able to track where I am in the sequence of trades. And then I'm going to be storing values in global variables. This is the way that I'm going to know which ticket I'm dealing with and what my accumulated loss is if I've had to stop and restart. So I just have four very simple functions, GV key, which will give me the key into global variables that I'm going to need, and I'm creating that as a function so that I have a consistent way of getting that key back. Then I want to get the accumulated profit from global variables. I want to save the accumulated profit, and when I'm finished with it, I just want to delete that item out of the global variables. But if you do forget to delete it, don't panic, because MetaTrader will remove any global variables that haven't been used for 4 weeks. Constructors, again, I have to have a constructor here because there is no default constructor, but it's just taking the same arguments, and all I'm doing then is calling the parent class. Remember that the C zone position net simply on-called to C zone position, but I still prefer to call the immediate parent for the constructor and let that handle everything, because I might go back later and change C zone position underscore net to do more work in here. And again, a destructor, but there is nothing in the destructor. And one more that has been modified for restartable, but it's here in the public section, is the open position. So let's start with open position. If I'm opening a position in a restartable mode, it may be a position that I've already tracked. So with the earlier implementations, every one of these was a brand new position. I simply handed in the ticket and set up the zone based on that. But because I may be restarting a position, I'm opening it with a ticket that already exists, I need to do a little bit more. First thing I'm going to do is call the open position using C zone position net. Now, this ticket will have all the information it has. If I'm up to the second leg, for example, I've got a position size of 0.41. So this will open up a position of 0.41 and set the zone above the entry price or below, depending whether it's a buy or a sell trade. And it will set the zone top and bottom up correctly. But then I need to know how much I've already lost, because the next time I make a trade on this, I need to bring that into the calculations to know what the lot size needs to be. So I'm getting this vol profit by calling the get vol profit method, which we defined above. We'll see that later. It's a very simple method, and passing in this ticket number. So all that's going to do is go out to the global variable and find how much accumulated loss I saved associated with this ticket. Now, if this is the second leg, and assuming I'm going with the defaults of 100 for the profit and 40 for the zone size, then the vol profit here would be minus 40. So I'm picking that up, putting into the mvol profit, and then just in case this is brand new, this will return 0 into mvol profit, I also want to save that just to make sure that there is a global variable for it. So I'm immediately calling set vol profit, passing in the ticket and this mvol profit, just in case this is a new ticket. And then I can just return the result that came back from the C zone position net here. So the change here in open position is simply to bring in my accumulated losses to date. Closed position also has a small modification. First, I need to know the old ticket number that I'm dealing with, and this is always going to be the ticket number at the top of the array. So if the array size for tickets is greater than 0, then I'm just getting the last element from that tickets array. So the mtickets array is defined in the ultimate parent class, the C zone position class. And if the array size is 0, then I don't have any tickets, so I'm just going to get a 0. This shouldn't happen because once you open a position initially, there will be something in this mtickets, but by just dealing with this, it's just an error condition, I suppose. By getting a 0 ticket number back, everything else will just fall through and not cause a problem. But once I've got that ticket number, I'm going to close the position by calling the parent C zone position net close position, and then I'm going to call that other method to delete the vol profit for that old ticket, and that's really the change that happens in here in this closed position. I'm deleting that old ticket, and I'm returning true if that was successful. So if the closed position has been successful, then I can return true. Otherwise, I'll return false, which means that next loop through, and if you remember to the way I've handled the failed closing positions, it has set the status of this position up to say that it's in a closing mode. So every time we get a new tick, it's going to attempt to continue closing that position. So it will keep going through here until we eventually return a true. And then the add new trade, this has to not only add the new trade, which was previously a simple matter of adding that trade number to the list of tickets, but it also has to accumulate the total losses, zero out the loss on the ticket that we've just closed, and update the loss to date on the ticket that we've just opened. So first thing I do is I get that old ticket number, which, same as the method above, is the last ticket in the array. And then I'm using the parent class to open up the new trade. So this does all the heavy lifting for adding a new trade. When it does that, it will, because I'm calling the netting class, it will have closed this old ticket, and that's why I get that number before I call the add new trade method for the netting class. So the old ticket has been closed and a new ticket's been opened, and that new ticket number will be again at the end of the array. Once I have that, I no longer need the old ticket in the global variables, so I'm just calling the delete method to get rid of that old ticket, and then I'm setting my new vol profit, this mvol profit, on that new ticket. And remember, mvol profit has been updated by the netting class already, so this already includes the loss on this old ticket. So I'm just updating a new global variable by setting it for new ticket for the new updated vol profit. And then here are the methods just to handle working with the global variables. First, the GV key, which gives me a consistent method of generating a key based on this ticket number, and all I'm doing is I'm setting the key to be zone position underscore followed by the ticket number. One little thing to note here, if you run this inside the strategy tester, then you may want to make a modification here to check that if you're in a testing mode, add something else to this. And that's another reason why it might be useful to have this inside a single function, because you can make that change once and then everything that uses this GV key will get that same value. And the reason you might want to do that, the same global variables are used by the strategy tester as are used by live trading. So if you begin running strategy tests here, you could easily be overwriting values in global variables that are used in your live trading. So it might be worthwhile just adding a test and changing this value if you're in a testing mode. Then get vol profit, I get the key by calling the GV key, and there is a global variable get method which will return either the value from the global variable or 0 if that key didn't exist. And normally you might want to check for that 0, but I'm quite happy to return a 0 in this case. The global variable set, or set vol profit, same for the key, calling global variable set, passing in the key and that new value. And then del vol profit, again, get the key, call global variable delete, or global variable del, and pass in the key. So very simple methods there. So all of that means that I'm saving the accumulated loss each time a trade is closed. So remember, I'm running this on top of netting. So every time I cross the zone, I'm going to close all the opposite trades and open one new trade. When I close those opposite trades, netting calculates my total loss to date. I'm storing that total loss to date in a global variable, and then I can simply retrieve that when you restart this and pass in an existing ticket number. I can read the accumulated losses and use that to carry on. Now I also have the restartable EA here. This has quite a number of changes because I'm not only implementing the restart, but because I have the ability to restart, I'm implementing in here the ability to have more than one trade. So going back to part 2 of this series, I said that although I'm doing a moving average cross, I'm only going to open a new trade if I don't have an existing position open. And you would have seen in the demonstration a little earlier that the fast and slow moving averages crossed, but I didn't open new trades as long as I had an existing position. So with the changes I'm about to make in this EA, I will be able to open multiple positions, and I'm tracking each one independently. So the first change though, I'm obviously including the zone position restartable.mqh file, and then I'm defining this ZB class as czone position underscore restartable. And this is why I defined this ZP class earlier. It makes it much easier to make this one change. Nothing in the inputs changes. Using the ZP class name, I'm defining zone position, but here you'll see this is an array of pointers to zone positions. And that array is what's going to allow me to open multiple positions at one time. In the on init section then, I'm not just creating a class for zone, or I'm not just creating an object of type czone position. I'm declaring an array of zone positions, declared the array here, and I'm setting that array size to 0. It should be 0 anyway when I'm first starting, but it doesn't hurt to make sure of that. And I'm creating this zcount variable, which just tells me how many I have, and that's only going to be used inside the on init. Now, because we may be restarting, and this is specifically for MT4. Remember that this series is about the classes for managing zone recovery, so I'm only doing this example for MT4. You can easily make these changes for MT5 if you want to. First thing I need is a count of the total number of trades that I have. This is a standard loop then through all of those trades, looking at each trade using the order select by position, and then checking if the symbol for that trade is the same symbol on my chart, and if the magic number is the same as my magic number, then this must be a trade that I want to restart with. Then I'm simply resizing the zone position array to be zcount plus 1, so just one extra place on that array, and then filling the last entry in that zone position array with a new ZP class, and the same arguments again, target, zone, size, and supplement. And then I'm calling the open position method on that class, passing in the ticket that I have currently inside the loop. So that will mean that this class now, with its open position, will take care of finding any accumulated profit I have, or accumulated losses I already have, and setting up the array correctly in there. And then I just increment zcount so that if I go back and find another, it will add that to the list. The next change, because I have an array of zone positions, I can't just call delete on dinit. I have to call delete for each of those positions. So I'm just looping through everything in the array and calling delete for zone position on that position. I don't need to worry about resizing the array. That will just happen when the EA terminates, but I do need to delete those classes to free up that memory. OnTick also changes because I have an array, so instead of just calling the OnTick method for my zone position object, I have to call it for each of the zone position objects, so another loop through the array calling the OnTick method. That's just normal cycle processing. And then previously I only opened a new position if I didn't have a position open, and let me go quickly back to the MA Cross ZR Net and I'll show you that piece of code. Here I said if the status of my position is equal to closed, which means I've got an object that I've created and the position is closed, then I can open up a new position. But now, because I want to have multiple positions at one time, I don't need to look at the status of a single position and determine that it's closed. So I've just removed that line completely. And all I'm doing is to check to see whether I've had a cross of the moving averages. If I have, then I'm opening the order, getting a ticket back. It's either a buy or a sell. And then here, if the ticket number is greater than 0, it means that I have opened a position, so a trade has happened. We calculated Z count above, nothing's changed, so I can continue to use that. So I'm resizing the zone position array to make one extra place at the end. And then I'm assigning a new ZP class to that zone position and calling the open position method with the ticket that I've just got from opening that trade. This will go through the restart methods of that class, but again, it will look for a global variable that stores the accumulated loss for that ticket. Won't find one because ticket numbers are not reused, and so it will simply assume that this is a new position and set the accumulated losses to 0. Now I've noted here, because all I'm ever doing is adding a new class, if you run this for a long time, then you will get a growing array of zone position, but you're unlikely to be running this for long enough for that to be a problem. If you really want to clean up those closed positions, you could build a loop here to go through this zone position array and delete any existing objects that are already closed and then compress the array if you want to. I don't expect that the EA would be running for that long before you have to do some kind of restart for an operating system upgrade or something, that it would be a problem. So I'm just not going to bother with that cleanup. And the rest of this EA is as it was before. No changes there. So this will open multiple positions, and although I can't easily show restarting inside the strategy tester because I can't really stop and restart the strategy tester and have it pick up existing positions, I can show the multiple positions being opened. So I'll just run a demonstration on that now. But first I'll just compile this to make sure that everything works, and it does. So let me go back to MetaTrader and run that example. So now I have the restart EA loaded. All the settings are the same as previously. I've already run it through to the point where it's opened the first trade, so I have my sell of one lot. And I know from earlier runs that before this sell closes, there will be another cross upwards there. So let me just run that through to the point where that happens. And here the fast moving average has crossed above the slow, and I've opened up a buy for 1 unit. And I still have the sell for 1 unit open. So these are two separate positions. Let me just let that run a little bit further. And now I can see that the entry for that buy has been closed because we've dropped 40 pips below the entry point for that. And I've now opened up this sell at 0.41, which is the zone for that failed buy. At the same time, the moving average has crossed again, and I've opened a new sell for 1 lot. You can't really read this on the chart. Let me here. So we can see here there's the sell order number 4 has opened up for 1 lot. So it's opening multiple positions, and where this position for ticket number 2 opened and then went back across the zone, it's closed that and gone into a zone recovery mode and opened up a smaller position to net that off. So I'll just stop that. And again, I'll run it without visual mode so that you can see the end result for the year. So because I'm running multiple positions, you can see that there are 2 lines here now because one of those will be holding some position while the others are closing. And you can see a very erratic line here because I've got so many positions open at one time. But down here, you can see my largest is still 4.32 lots, which is much better than not running with the netting approach. The last variation I want to introduce is trailing stops. This is not strictly a part of zone recovery, but if I show you the chart again, then you can think that at this point where the buy was potentially in profit before it reversed, if that profit were high enough, then you don't really want to cross the zone and go into a loss. You might want to simply take some profit. And one of the common ways to do that would be with a trailing stop. So what I'm going to do is show a technique so we can implement a trailing stop on this first leg only, because once I have crossed the zone, then you can't really apply trailing stop because you must reach the exit in order to come out at zero loss. But for the first leg, if this first leg moves far enough, you may want to implement a trailing stop so that rather than go into the zone and then go into a zone recovery mode, you simply take the small profit that you have and carry on. In the final modification, or the final option, and this is the trailing stop class, I'm including the restartable, so this is going to be based on the restartable class, changing the class to C-zone position trail, inheriting from C-zone position restartable. I want to keep track of my trailing stop price, so I need to create a new variable. That's this mtrail price. Constructors, just as before, I need them, and the destructor again has nothing in it. The functions that are going to be changing for trailing stop, the open position function and the on tick will both change. First is in open position. I'm setting the trailing price to 0, which is my way of initializing that to say I haven't set a trailing price yet for this position. Now, because this is inheriting from restartable, I might be restarting an existing position. If the position is open and has already crossed the zone, so there is an existing accumulated loss, that will be picked up when I call this C-zone restartable open position ticket, and I detect later if there is an accumulated loss, then I won't do any further trailing stop. But if this is an existing position that hasn't already crossed the zone, I'm still initializing this trail price to 0. What this can mean is that if the trail price had been set and then the price dropped back while the system was shut down, I'm going to reinitialize that at 0, so you can lose it. If you really wanted to save that between sessions, you could save this in global variables the same way we did with the restartable, but I'm at the moment assuming that we're just starting with no trailing price on the first entry of the first leg. The on tick, first thing I'm going to do is call the C-zone position restartable on tick. That takes care of most of the work. That will open up a second leg or close the position as needed. And just in case that has closed the position out, if the status is not equal to open, so if M status is not equal to zone position open, then it means that I've just closed this position, or it has been closed for a while and I'm just going to return. But if not, I need to deal with moving the trailing stop. So you can see here, first thing I'm doing is checking mvol profit. If mvol profit is not equal to 0, then it means that I must have already incurred a loss in crossing the zone, and so I'm not on the first leg. I can't do trailing stop on the second or third leg because they need to reach the other end of the zone profit area in order to close out at 0. So if the vol profit is not equal to 0, I don't want to do anything in terms of trailing stop. So this condition just says if it is equal to 0, then I'll go into this trailing stop logic. So first I just declare a variable of type double to get the current market price, and then I'm saying if my direction is a buy, then I'm picking up the bid price, and this bid is defined in the ultimate parent class for the zone positions. And then if the trailing price is greater than 0, which means that I have set a trailing price already, and the price has dropped below the trailing price, then I'm going to close the position. So we're in a buy mode. I've got a trailing stop price that has been set, so it's not just the default 0 from entering initially. And now the price has fallen below that, so this is a typical trailing stop exit. And then I just call close position and return. If that hasn't happened, so remember this is going to return, so if I fall through that, then I'll get to this section. If the price minus the zone size is greater than the zone high, so we're in a buying mode, and I'm saying that the price minus the zone size is above the zone high, which means that for my example numbers of 100 for profit and 40 for the zone size, I am now at least 40 above the zone high. That's when I'll start to implement a trailing stop. Then I'm also saying, and the price minus the zone high is greater than the trailing price. So I only want to set the trailing price if it's going up. So if my new trailing price would be higher than the existing trailing price, or the trailing price hasn't been set yet. If all of that's true, then I just set my new trailing price to be price minus the zone size. And then the sell is just the opposite. I'm using price greater than or equal to trail price instead of less than or equal to, and I'm calculating the size as price plus zone size, not price minus zone size. So that will take care of implementing a trailing stop that only appears when I am at least, for my example sizes, it only appears when I'm at least 40 ahead of the entry price, and it will then continue to move upwards in case of a buy or downward in case of a sell as I get a slightly better trailing stop price. And those are the only changes needed to implement a trailing stop, and remember that will only happen on the first leg. Just compile that class to make sure I don't have any errors. I don't. So now I will go to my EA for zone position trailing. This is the MA Cross ZR Trail EA, which implements trailing stop. First thing is to include the zone position trail, which gives me the trail class, and I'm declaring my ZP class as czone_position_trail. Nothing in the inputs changes. Because this is based on restartable, I'm going to be still having an array of zone positions, which means all of this logic for the array sizes for zone positions doesn't change. All of this reloading existing positions doesn't change. Deleting the positions when I terminate on D&it also doesn't change from the earlier example. Nothing here in onTick changes. In fact, no other changes happen, just the change to a different class. So I will compile that. That worked, and then we'll just go to the demonstration to show how that's going to make a difference to the trading. So I have the strategy tester already running on the MA Cross ZR Trail. I've waited, it's already opened up this sell trade, and I know from running this previously that this price is going to dip down and then come back, and it will reach a point where it is at least 40 ahead of the entry point and then come back before going on. Now, in the earlier examples, this continued on, and I actually made my 100 pips of profit on this sell trade. In this case, it will close out, so I'm only going to let it run that far just to demonstrate that the trailing stop is working. So it closed here. Now what we can see from that entry point, which was here, the best price we achieved was 47 pips below, and then it closed at, my lines aren't quite accurate, but it closed at about 40 pips behind that. So we set up a trailing stop then that gave me 40 pips between the best price and the close, which means that on that sell I achieved a profit of only 6.5 pips, where previously I achieved 100, and this is the same data, so this will continue to move on down. I'll just run this a little further to a point where a zone establishes so that you can see that it doesn't implement a trailing stop on the second leg of the zone. And here is the buy that you saw in the earlier example, and I know that a zone is going to establish because that will close out and open up a small sell to offset this buy. And here's the sell that has opened to offset that buy. This is actually a second trade that's opening because the prices have crossed again, but what I'm looking for is for this sell to close out because of a trailing stop. We have a point here where that sell that was opened up as a first leg has closed because we achieved a best price that was 57 pips ahead, and when that came back by 40 pips we closed that trade. This sell, which opened at a higher price, is the second leg, So we've actually reached a best price of 68 pips below that, but even though the price is coming back, this hasn't closed. So that's just demonstrating that the trailing stop is only applying on the first leg of the position. And as usual, I will just run this through now without visual mode so that you can see the graph and see what that does at the end of the trades. And here's the graph showing the results after putting in the trailing stop. You can see that in general, the performance is not as good. And this is what I generally find with trailing stops, that the benefit you achieve by avoiding the losses by using a trailing stop are not as good as the benefit you would achieve by letting your profits run. So this achieves a lower end profit, and it actually has a larger drawdown in the middle here. And 3.54, we do have a slightly smaller, largest lot size. So I wouldn't necessarily use this. In fact, I wouldn't be using zone recovery at all. But I do find that some of the programming we've looked at is quite interesting in the techniques that are required to handle this. So that's the end of this third part of the zone recovery series. And in fact, that's the end of the zone recovery series. As I said in the beginning, I don't recommend this. The examples I've shown here do appear to show that it's a good idea, but it's very easy for those zones to run on for just a couple of steps longer and to reach position sizes that you simply can't handle and blow out your account. But the coding required for this is interesting. There are some techniques that you may want to carry forward into some of your other code. If you found this useful or interesting, please click the like button. And if you want to see more of these videos, then click subscribe. And if you click the bell icon, you'll be notified when we release new videos. So next time we'll be back to something more interesting and more practical. So until then, thank you for watching.